because their best friend was just taken out of their class.
You don't want to ask me those kind of questions. Paul, Willie, Zach, what's happening? Scatmouth, what's going on? Triple Q Queen, what's going on over there? Uh-oh, here we go. I don't want to start a damn poll. Why do I want to start a damn poll? All right, Pastor Kevin, Triple Q Queen, what's going on? Traveling Earl, Pastor Ken, Carlos, que pasa? Best cut cult leader. Mike, Bobby, what's going on? What's going on? All right, Pete, Tony, alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those are companies I've consistently increased their profits for at least 2 decades. 20 years of continuous profits. What the hell's wrong with that idea? I think that's a great idea. Think about it. Why would you invest your money anywhere else unless the company is consistently profitable? I mean, it just doesn't make sense. Well, at least not to me. Now, some of you guys may have something different that you're looking for. You know, capital appreciation, where you buy a stock and overnight it jumps through the roof. Yep. Well, you're in the wrong place. It's not what I'm looking for. Okay, if it happens, great. Not what I'm looking for. I'm looking for safety. I'm looking for predictability. I'm looking for consistency. I'm looking for profitability. And most important, preservation of my capital. I'm retired. I do not feel like going back to work. I could call it selfish. I've been working since 1973. Okay, so I'm not even going to ask for forgiveness. Forgive me if I don't want to work anymore. I think 40 or 50 years is plenty of time. All right, so that being the case, who do we have over here? Sonny, Mr. 3P, what's going on? Adam, what's going on? Real World Dad. All right, hang on. Born to Dolt. No idea what that means, but hello. Kimberly, how are you doing? This message is held for review. That's never a good sign. Emmanuel, what's going on? JP, Ted, Kenny, what's going on? What's going on? All right, him at home. That's a good one. Remy, how you doing? Julie, Kane, what's going on? Emilo, what's going on? G-Love 89. Porcupine Pete. Pete, do you know there's a law in the state of Florida? Seriously, there's a law on the state of Florida. It is against the law to have sex with a porcupine. I kid you not. It's an actual law. It's against law to have sex with a porcupine. Sorry for you, Pete. You're going to be dry as a bone. Anyway, Riddell, Michael, learn guitar. How are you doing? Angel, Jimmy is apparently approving your location. I have no idea who Jimmy is, but alrighty. Born to do it. Winning affirmation. Okay. Nice comb over. You like that? Hey, I'm 62 and I still have almost all my hair. You like that? So when you get in your 60s, let's see if you still have your hair. Is it illegal to do that with a... I can't see what that is. I'm on. George, what's going on? Po boy. Alrighty. So we haven't had anybody ask to look at anything yet. L&G, what's going on over there? How are you doing today? Mark, Danny boy. All right, APE, Amon, what is APE? Well, let's take a good look at it. Oh, let's check out Nike, because we looked at that one this morning. What are we looking at? Duke, we're looking at investing in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. That's what we're looking for. Nat Gas, what's going on? Okay, Remy, you got to give me the ticker symbol. Never heard of that company. T-Bone, what's going on? All right, first one on the list. Let's take a look at Nike, see what it happened out at. Let's get rid of that. Let's do that. We're good. Everything seems to be good. Recording, all the levels proper. All righty. So, First one on the list, we're going to take a look at Broken English, businessman. How are you today? Good day, good day. AMD, Advanced Micro Devices. I don't know why people like companies that are having issues with their bookkeeping, especially when we're in the news. We're having issues with our bookkeeping. Numbers just don't seem right, yet you're putting your money in there anyway. We'll take a look at it. Am fine friend. All righty, wonderful. Take a look at Nike, first on the list. It's up on the board, might as well. What's going on here? Oh, that's not good. Well, that's not good either. Now it doesn't want to do anything. Well, that's never a good thing. Huh. Oh, that's it. There we go. Had to get some approval. All right, so first thing we're looking at, CTRL Alt Delete. Calibri, Control Alt Delete. Thank you. Told you to get Mackie. Who the hell's Mackie? Oh, to get a Mac. Yeah, I have no idea how to use one of those. So you want me to negate everything I've learned in all my days online since the 90s and learn something totally new? Yeah. I'm not quite sure that's going to go over very well. Anyway, Nike is at top of the list. Let's take a look. The high, the low, where was it a year ago? Where is it now? Look at the motion. Down, up, down, up, down, up. We're right now at 60.83. All right, 60.83. Well, let's take a look. Currently at 60.83, we'll be looking at the 61s. The 61s are going for $255. Now, $255 on a $61 stock is over 2%. Now, remember, I tell you, I'm looking for 1%. Well, Nike's offering 2%. So you get a couple of questions to ask ourselves. Totally. Okay. Damn it. Oh, much better. All right. Ooh, that one didn't taste quite right. High of the year was a year ago, 97.40. Look, high of the year. That was a year ago. Okay, well, from there, we dropped, retraced, dropped again, retraced again, dropped again, 1, 2, 3, 4. Fourth time this thing has dropped significantly in the past year. Well, here's where we are right now. Okay, high, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down. Now she's going up, or is she? Let's zoom in a little bit closer and take a good look at that. You're a very beautiful sweetheart. Interesting name. Cool beans. EFX. Uger I-10. What the heck is EFX? Well, before we get to that one, let's take a look here. All right, last 30 days. Down, up, down, up. What's going on here? Now, I normally would have jumped into this one today because it did open higher than it closed yesterday. I always tell you, anytime I see a 30-day bottom, right there, I look for 2 days to the upside, and then on the third day, I jump in. Well, take a look. Monday was higher. Tuesday was higher. Now, Wednesday, even though Wednesday closed lower than it opened, it still opened higher than yesterday's close. So I would have jumped into it. It's currently at 60.83. So let's take a look from this morning. Because this morning, she opened up at 61.45. So I would have done the 62s. Okay, now I'm not cherry picking. I'm going by my own rules. Okay, I like a 30-day bottom right there. 2 days to the upside, 1, 2. Now, I'm not going to say I wouldn't do it even though it's down at the moment, because factually, I would have jumped in if I had any money. Now, you guys all know that all my money is invested Monday and Tuesday. Wednesday comes along, I very rarely get into anything on a Wednesday, because Wednesday and Thursday, most of my money's tied up from Monday and Tuesday. Okay, see, I'm a weekly trader. I do options, weekly options. Monday to Friday is the whole week. So first thing Monday morning, all my money is invested, or at least 85 to 95%. Lately, it's been more like 75 to 80 because we have that TDS crap going on with some of you people in the audience or some of the people in the economy just panic when somebody says the wrong thing. Anyway, so let's take a look. What would the 62 look like this morning? All right. So the 62 right here, 210. Well, that works. So let's do one. The 62 right there. All right, one contract at 62. Now, for those of you that are new here, and those of you who've never been here before, I like to do what's called a covered call. Specifically, covered calls on quality dividend stocks. Now, I consider quality dividend stocks any company that's increased their profits every year consistently for at least 2 decades. That's my idea. Okay, you guys got to figure out what works for you. What is right for you may not be right for me. And I'm going to call you out. Now, I'm not going to insult you or anything. I'm just saying that's something I would never do because I'm very particular of what I do. Okay, when you reach retirement, you have 2 options. One, rely on someone else to make you, to give you money every month to take care of your bills. Or do it yourself. Well, I chose the latter. I chose to do it myself because if it wasn't for me doing it, I'd still be working for someone else trying to build up that nest egg. So if I did give it to a professional money manager, they are so gracious to give me 4 to 5% per year. Well, 4 to 5% per year, I would have to double or triple or quadruple what I already have in order to make it ends meet using their logic. So my logic, simple, safe, predictable, consistent, 1% per week, fine. I got to retire with what I have. And I don't have to work anymore because 1% is perfectly fine for the obligations that I have on a monthly basis. The process works 275 days on Nike, 61 call. Okay, AWCO3, I'm not quite sure what you mean by that, but okay. And Uger wants to take a look at EFX. We'll look at that in a minute. Let's finish up with this one. One contract, Nike. This morning she opened up at 61.5, so I'll be looking at the 62s. I'm not going to blow smoke and say I wouldn't have done that because, yeah, I would have. Okay, market, here we go. This is what it would have looked like. Buy one covered call, Nike. 100, that is the weeklies. 3 July 25. That means this option is going to expire next Friday. Not this Friday because we only got 2 days left. What kind of option premium do you think you're going to get with only 2 days left? Not a whole heck of a lot. So next week, the $62 call strike. Because this morning the stock was at 61.40 or whatever it was. So 62 would have been the one I personally looked at. $62 call, Nike at the market to open. Now, profit $315.50, 58.85 would have been the investment. Well, let's see what that looks like for this week. Now, for those of you that are new, let me briefly explain to you what I'm doing. Okay, you may think I'm buying and selling stocks and options. No, I am creating cash flowing assets. Think about it. You buy an asset, it gives you money every single week or every single month, however you want to look at it. Well, I'm looking at it on a weekly basis. Okay, I'm creating a cash flowing asset, weekly cash flowing asset. Okay, and just so happens to be Nike on the list today. So let's take a look. What does this look like? Okay, 315 is the profit, so we get the calculator out. Okay, where the hell did the calculator go? Where the hell's my calculator? Let's try this one more time. Calculator. There it is. Come on. And there it is. And now we have it here. All right. All right. Calculator. To figure out, to make the calculation, what is the rate of return? Well, profit, 315. Cost of the trade, including commissions and fees, 58.85. All right, let's do a little bit of math. Okay, 315 is the profit. Whoops, not 2. 315, and then we divide it by the investment, 58.85. 58.85. It gives me a grand total of, holy cow, 5.3% for 1 week. Think about that. 5% for 1 week. So you got a couple of questions to ask yourself. Number one, does it make sense? Buy a good company, okay, invest into a good company, create a cash flowing asset. Whether you get 1 contract, 2 contracts, 5 contracts, it's all the same. You're taking a chunk of your money and you're creating an asset. Okay, well, the asset here is 100 shares or 1 contract. Well, 1 contract is going to give me $315 profit just for this week. Now, next week, it is going to be different because the stock prices move up, the stock prices move down, just like any other cash producing asset. If you have a classic car that you rent out on special occasions, same thing. If you have a residential rental real estate property, okay, a vacation home that you rent out, same thing. That asset costs you X amount of dollars. What is your rate of return? Well, whatever you paid for that asset, whatever comes from it, that's your profit. You take the profit, you divide it by the cost of the asset, and that will give you your rate of return. Well, this asset here, 100 shares, is costing me $5,800. Okay, now I'm selling it to someone for the same price I paid for it, $61.50. Well, I'm selling it at $62, so I get a little bit more if it sells. If it doesn't sell, I'll do the exact same thing next week. Now, next week, I can almost confidently say I'm not going to get 5% next week. What if I get 1, 2, 3? Is that okay? You have a couple of questions you need to ask yourself. Number one is, does it make sense? Create a cash producing asset, sell something every single week, get the cash flow coming in. What does it mean? Okay. Number two, do you like this company? It's a simple question. Do you understand the company? Do you know what they do? Number three, are you okay with buying it at this price and holding it until the day you die or until it hits your target? Well, my target is 62 because the current price is 61 and change. All right, I want to sell it for 62. And then I want to create cash flow every single week. So next week, or I should say next Friday, when this option expires, because the options I'm looking at expire every single Friday. So every single Friday, I go in and I take a look at my balance sheet. What did I pay for it? What strike price did I sell? What is the stock at now? What does that mean? What do I have to do? Well, I actually have no idea because today's Wednesday. I won't know what to do until 2:30 on Friday afternoon, because at 2:30 on Friday afternoon, that's clutch time. What does that mean? That means the 2-minute warning. That means we got 1 play left to go. However you want to call it. Options expire at 3:59 p.m. because at 4 p.m. markets close. You can't do anything. So I have to know exactly what I'm going to do by 3:59 p.m. on Friday. So at this moment in time, 5% return on Nike for 1 week? Hell yeah. Why the hell not? Did I write that one down? Yep, I wrote it down. Okay, I wrote it down, 62, Nike, and it came up with 4 point something. Well, this one's 5.3. That works for me. So think about it. Does it make sense? Buy a cash producing asset. However you want to verbalize it, however you want to compartmentalize it, okay, figure it out. Okay, for me, cash producing asset. Okay, 100 shares, 1 contract. 1 contract brings me in 325. Oh, yeah, it's moving. Because it was 315 a little while ago. So apparently it's trading after hours. So Does it make sense? Do you like it? Okay? Are you okay with it? Now, it's not that difficult. You have to be able to be okay with every choices you make. And you also have to understand that the valuation of this cash producing asset is going to fluctuate. It's going to go up, it's going to go down. Now, if it goes up, great. You adjust your strike prices according to what did you buy it for? What strike price you're going to sell? How much time do you got left? What does it mean? Okay, as the stock price goes down, same thing. What did I buy it for? What strike price did I sell? Where is the balance? Cash flow, risk. It's a balance. Light, dark, hot, cold, hard, soft, balance everywhere. Okay, so 5.3, hell yeah, I like that one. Okay, so where am I? Somebody had a question. EFX. Okay, Uger. I don't know, is that right? Uger, EFX. Never heard of it. Let's take a look. Let's get out of there. Let's go back to single. Let's go back to here and let's put in, because Uger was the very first, second one to ask. EFX. Equifax Inc. Hell no. Okay, Uger, come on, dude. You've been here before. Okay, I'm really good with names. I am. Uger, you've been here before. You know. You've listened before. I don't do monthly options. 18 July, 15 August, 17 October. The numbers just don't work. Okay, the sign, you might not be able to read it. It says weekly options. Okay, I don't do monthlies. The numbers don't work. Pressure. What's happening, dude? How's it going? Okay, what do we have over here? Totally. All right, let's keep on going. Uh-oh. What do I have? What was that? Oh, a couple people over here want to be invited live. Now, for those of you that want to be invited live, and so we can interact verbally and we can, whatever, you got to send me your phone number first so we can have a conversation. I don't let just anybody come on and co-host with me unless I've had a conversation with them. Don't take it personally, because I really do not want to talk about Amway. I don't want to talk about politics. I don't want to talk about religion. I only want to talk about dividend investing for weekly cash flow. How do dividends play into this? OGIRS. Uh-oh. Should I really pay attention to the OGIRS? The name doesn't even sound that good. Okay, now if it was IRIS, not IRS. Okay, anyway, how do dividends play into this? Well, simple. You have two choices when you're picking a stock, right? Especially dividend stocks, because a dividend is a portion of the profits the company gives back to the shareholders, and that's us. We are the shareholders. When we buy and we sell, well, we become shareholders. When you buy some stock in a company, you own a portion of that company, which entitles you to a portion of the profits. So, two choices. Are you ready? You can invest in a company that takes all the profits, puts it back into the company so that the stock price will grow. Yeah, if that's what you're looking for, you're in the wrong place. I'm trying to be polite. You're wasting your time if you're looking for capital appreciation. That means you buy a stock and you wait for it to go up. It happens every day. You buy a stock, it shoots to the moon. Well, if that's what you're looking for, you're in the wrong place. Sorry. I'm looking for cash flow. I'm 61. I'm retired, which means throughout my working life from 1973 to 2 years ago, 2022, how many years is that? 73. 2023 would be 30, 40, 50, 52 years. Holy shit, I've been working for 52 years. 1973 to 2022. Something like that. Okay? So the money that I have earned has to last me the rest of my life. Now I'm 61. I'm in excellent health. I don't take any medication. I play soccer still. Believe it or not, I still play soccer. I don't play as often as I'd like to, because as much as I hate to admit it, my body just won't do what it used to do in my 20s and 30s. So if I play soccer for 1 or 2 hours, It takes me 2 or 3 days to recuperate. It just is what it is. It's part of getting old, and we all know it's coming. Whether you like it or not, or whether you agree with it or not, you got no choice in the matter. It's Father Time is just tapping me on the shoulder, saying, brother, you just can't do this 21-year-old stuff anymore. It is what it is. All right, but anyway, besides the point. All right, so dividends. Someone asked a question, where do dividends come in? Dividends come in specifically. Let me go up to the screen and explain to you where dividends come into this little game. Let's get out of here. Let's get out of here. And here we go. You see all this, see the calendar behind me? You see all these little tiny green dots? All these little tiny green dots represent companies that have increased their profits and have dividends that they want to give back to their investors. Now, we look every single week, usually on a Monday, to find out how many companies can we invest in this year or this week. Well, at this week, it was 10,136. That's a lot. Okay, so my criteria, I only have 2. When I'm picking a stock, I have 2 criteria. That's it. 1, consistency of profitability. That means the company's consistently profitable. That means they make more money this year than they did last year. They're making more money last year than they did the year before. Well, think about that. 20 years in a row. More and more and more and more and more profits. Do that 20 times. Well, out of 10,136 companies, only about 300 fit what I'm looking to do. Okay? Ready? Here we go. Dividend Kings. Okay, I believe there's 54 companies that have increased their profits for at least 5 decades. That's 50 years. List 2, Dividend Aristocrats. 67 companies that have increased their profitabilities for 25 consecutive years. Then you get the Dividend Champions. 150 companies that have increased their profitability for 25 years. Do you see a little discrepancy there? Dividend Aristocrats, Dividend Champions. Well, the aristocrats are a little bit more snobby. Let's put it that way, a little bit more snobby, but still 25 years. Okay, and then list number 4, the Dividend Champions. 300 companies that have consistently increased their profitability for 10 to 24 years. Not quite 25 yet, but 10 to 24. There's about 300 companies like that. And then for the fun of it, if it's good enough for Dave, it's good enough for me. Oh, sorry, Warren. If it's good enough for Warren, it's good enough for me. We use Warren Buffett's list. Okay, so those 5 lists will give you over 300 companies that look good. All right, let's take a look at some more questions. That's what I'm looking for. Those are the stocks I'm looking at. All right. Okay, Uger, EFX, no. H, Hollywood, what's going on? Key to Life, how are you today? AWCO, okay, you're going to explain that to me in a minute. 275 days on Nike, $61 call, don't know what that means. Some comments in this live were filtered. Apex, would you consider TSLL at very low price and 4% per week and pays dividends? Now, believe it or not, every once in a while, I will throw some mad money at something like TSLL, if the numbers work. Only if the numbers work. But yeah, but mostly no. Royal Saucer, Trinity. Trinity Capital, you gotta give me the ticker symbol. Okay, if it doesn't have 2 decades of consistent profitability and weekly options, it's gonna automatically be a no. So make sure you understand what it is you're looking at. James Davis, Nike has its earnings this week. Absolutely, I know that. Nike this week, 0.039. I have no idea what that means. Why don't numbers work with monthlies? Holy cow. Did you really just ask me that question? All right, simple math problem. I'm looking for 1% a week. Let's look at a monthly, just for the fun of it, because someone's asking me why numbers don't work for monthlies. All right, everyone's favorite, Realty. Here we go. Okay, trade. Here we go, monthly. Here we go, 18. Okay, we don't need to see all those. Just look at the last 6. Here we go. All right. Here's why monthlies don't work. Now, everybody knows who Realty is. Like, Realty. Yeah, no, thank you. All right, you ready? OG Iris. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay? Now, let's look at the numbers. It's currently at 57.08. The closest strike price to 57.08, 57. Okay? Doesn't have a 57, but they do have a 57.5. All right, let's do that one. 57.5 is going for 60 cents. So let's do some math. You ready? How much is it costing me? You know what? Let's just do the whole gambit. All right, let's just go do this. All right, put that over there. Let's go here. Let's take a look at covered call. Let's do the 57.5 right there. Let's do one contract right there at the market to open. And here we go. Buy one covered call, Realty, 18 July 25. That's the next option. 57.50 at the market to open. Well, the profit is $107. Okay, $107. Well, what is the investment? $56.43. Let's check it out. Let's get the calculator. $107 divided by 5643 gives me a grand total of 1.89. It's a monthly. There's 12 months in the year. So let's multiply this by 12. Okay, multiplied by 12. Yay, 22%. Now, 22% might be good for you, but that's only half the problem. Because wait, it actually gets worse. Hold on. So if I do a monthly on Realty, I'm going to get 22.7%. Okay, that's good for some of you. I want 1% a week, which is 50% a year. Huge difference between 50% a year and 22%. But let me show you how it gets worse. Okay? Now, let's get rid of this because I just don't like that idea. Let's go back here. Let's go back here. Now, let's show you something really interesting. What I really don't like about monthlies. Okay, we are at 625. So 525 would be right there. All righty. So, Mr. IRS, are you ready for this? Okay. This is 1 month. Okay? You're way over here, 55.5. Okay? She goes up to 56, drops back to 55, jumps up to 58, drops down to 57, jumps up to 58.5, back down to 57. Great. Now, tell me, where is it going to be in 30 days? This is 30 days. Tell me, where is it going to be in 30 days? Now, I can pretty much guess a pretty close idea at 5 days. Well, that's 1 week, 5 days. Okay? Weekly options, I only got to guess for 5 days. Monthly options, 30 days. Okay? So I've got to guess, where is it going to be in 30 days? Yeah, that ain't happening. Secondly, I'm getting 22% a year. No, thank you. I prefer weeklies, because weekly I can get 1%. Now, 1% every week, that's 50% per year. Now, I don't know about you. I didn't go to college. Terribly sorry. You're learning from an uneducated person. Didn't go to college. But I do know that 50% is a hell of a lot better than 22. Monthly options for this strategy do not work for me. Okay? For me. You work for you? Fine. You guys do it. I don't do monthly, so please stop asking me. All right? Monthlies do not work for me. All right? So, next. Next. I don't like monthlies. The numbers just don't work. And I love it when people say, why don't they work? Because of math. 1 plus 1 equals 2. Well, you do that 12 times, well, that's only 12. But 1 plus 1 equals 2, but you do that 52 times. That's 52%. Well, 52 is better than 22. That's why I don't do monthlies. They just don't work for me. Sorry, it wasn't clear. Your process works. Bought Nike today, sold the 61 strike. Okay, 275 profit. Awesome, dude. Good for you. It's actually 10 days, not 1 week, but I bought the 62s. Okay, Eric, I don't buy options only because 80% of all options expire. But if you're doing the same thing AWCO did, maybe that works. All right, so sounds like less premium and more risk. Okay. I'm trying to figure this out. Less premium, more risk. Is that for the monthly or is that for the weekly? Because you weren't quite clear with your statement. See, I like questions. I don't really like statements because statements, what the hell am I going to do with a statement? And a statement's usually your opinion. Okay, if that's your opinion, sounds like less premium and more risk. The monthly. Exactly. Less premium, more risk. All right. No, I just don't like monthlies. The numbers just don't work for me. But I'm glad you agree with me, though. Thank you. Frederick, Windows key plus R, then type CAL, then enter will bring up your calculator. Thank you, Frederick. Alrighty. Daddy am the same as Odom on TikTok. Thanks. Thanks, Pressure. Okay. All right, so what do we have next? Chuck, how are you today? Why is your target price 62? Eagle 18. Let's go back and I'll explain to you why my price is 62. Nike. Had to get the choo-choo back on track. All right, now, every night you usually hear me say the exact same thing over and over and over again. So when I say 2 days to the upside from a bottom, let's isolate that and take a closer look. Okay? 30-day top right here, 65. 30-day bottom right here at 59. Okay? That's the bottom right there. That was Friday. Okay? So Monday was higher. That's 1 day. Tuesday was higher. That's 2 days. I want 2 days to the upside. Then, 2 days to the upside, I want to jump in on day number 3 if and only if it opens higher than the previous close. So yesterday's previous close was, let's find out, right here. See, here's the numbers right up here. Oh, before I forget, for those of you who do not know or on your phones and you can't see the numbers, this screen right here is live on YouTube. So go to the bio, whatever website you're on, because we're streaming to like nine different platforms. Okay, whatever platform you're on, go into the bio, look at the website. That 10-minute will take you right to YouTube, the10minutetrader.com. This is live, so you can see the numbers a lot easier on your big screen TV. So I have a lot of people in the audience that say, hey, I listen to you on my phone in front of my big screen TV. So they're watching on the big screen TV on their comfy couch or the recliner, phone in hand, listening and then watching the numbers on the computer or on the TV screen. Okay, so as I was saying, bottom was Friday, Monday, day 1, Tuesday, day 2. You'll hear me every single time say, I look for 2 days to the upside. On the third day, I will jump in. Usually jump in the morning. So what did the stock open up on the morning? Okay, so put it right here. Okay, it closed yesterday 61.42. That was yesterday's close. So first thing this morning, if she opened up higher than 61.42, that's my cue to jump in the morning. So this morning, she opened up 61.45. I usually buy at the morning, 61.45. So what is the closest strike price to 61.45? 62. Now, I'm not going to blow smoke and say, well, it's at 60 right now. Let's do the 61s. No, because it wasn't at this price this morning. I do my trades in the morning. So I'm not going to lie to you guys and say, yeah, I would have done the 61. No, I wouldn't have. Because she opened up this morning at 61.45, which means if I bought it this morning, I would have sold the 62s. It just so happened to go down today. It's just something I have to deal with. But I didn't because all my money's invested on Mondays and Tuesdays. I very rarely buy something on a Wednesday or Thursday. Rarely. Okay, I will if I get a dividend that just pops up out of nowhere. Now, you'll see that every once in a while. Okay, you're doing your trading. Now, I don't like to collect the dividends. I just use them to tell me when a stock's going to move. Okay, let me explain. I'm going to explain that in a second, okay? Because I just opened a can of worms, and you guys are going to want to see what that can of worms looks like. So to answer your question, Eagle 18, I'm not going to lie to you, okay? Monday was 1 day to the upside. Tuesday was 2 days to the upside. This morning, she opened up what she opened up at. The numbers are what they are. If I bought it this morning, I would have bought it at the market at the open, which would have been 61.45. And then I would have sold the closest strike price to that, which would have been the 62. Okay? Yeah, for Nike. All right, so why do I not want to collect dividends? Let me show you. La, 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 la. Back here to Market Watch. Let's get rid of this. Let's change this. Whoops, to this right there. All righty. Now, this one makes a little bit more sense to me. Now, what you're looking at is a calendar. Regular calendar. See, June 2025. Today is the 25th. Okay? Now, these little green dots represents companies that are going to pay out a dividend. As a matter of fact, this is called an EX dividend calendar. Looks like any other calendar, except has these little green dots. Now, when we're dealing with dividend stocks, there's 4 dates to remember. You know, like birthday, anniversary, Valentine's Day, dates. Okay, 4 dates. Date number 1 is the announcement date. That's when the company's representative said, hey, everybody, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. We had a great year. We made all this money. You're going to get your share in the form of a dividend on this day. That's the announcement date. That's when they tell you what they made and what you're going to get. Because as an investor, as a shareholder, you are entitled to a portion of their profits. Date number 1 is the day they tell you that, the announcement date. Date number 2, that's the important one. EX dividend date. It is represented by those little green dots. Each one of these little green dots represents a company on this list that have increased their dividends for 25 consecutive years. Okay, so date number 2, EX dividend date. If you want to get the dividend, you have to buy it before that date. See the 27th? MDT, Medtronics, BEN, Ben Franklin Financial. Okay, Franklin Financial. If you want to get the dividend, you got to buy it on the 26th, the 25th, the 20th, the 11th, the 4th, the 6th, any day before this date. If you buy it after this date, you don't get the dividend. Whoever owns, date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. Bitch, moan, complain all you want. If you do not own the stock on the date of dividend, on the on the on the date of record. If you don't own the stock, if you don't own the stock on the date of record, you don't get the dividend. Date number 4, the payment date. That's when you get your money. Cha-ching. Yeah, 4 dates. Now, I don't like collecting the dividends because, see little green dots? Stocks, dividend stocks, have a tendency to increase. Go up, increase in value before the EX dividend date. Okay, the stocks go up in price just before the EX dividend date, but they go down after the dividend date. So I don't really like to collect the dividend. I like to buy, see Cincinnati Financial, the 23rd. I like to buy it 2 weeks prior. So it would be the 9th on a Monday. Okay. General Dynamics. Okay. It is on the 3rd of July. If I'm going to buy that and look to get the dividend, I'm going to buy it 2 weeks on a Monday, the 16th. Okay. So 2 weeks before the EX date, that's when I want to buy it. Raphael, QYLD. Really? Really, dude? Now, when I say, oh, hold on a second. I haven't done this in a while. Let's do this for a second. Just so you guys know and understand. Website. We want to go right there. We're going to take a look at YouTube because I'm going to show you exactly where this trading strategy came from. Yeah, there's all my social media. I actually get more social media than that, but those are the ones on my website. Let's go take a look at YouTube channel. All right. The10MinuteTrader.com. Okay. 10MinuteTrader.com on YouTube. Look at that. 1,100 videos, 1,100 videos. The 10-minute trading strategy came about when my 9-year-old daughter wanted me to teach her how to do it. Now, in 2008, my daughter was 9. She said, Daddy, what are you doing? Can you teach me? Okay, so I'm going to introduce you to my 9-year-old daughter. Videos, here we go. The oldest, 2008, it was a long time ago. And here's the princess right here. Oh, that's not going to work.
Which my dad didn't let me call him that. Hi, I'm JC, and as you being part of my internet website club thingy, which my dad didn't let me call him that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stock.
There's me.
21 days in the month of March. What does that mean? That means every single day you buy different stocks.
Here's my favorite part.
The company paying out dividends. Seriously.
Come on. That's funny. I look at it. Every time I look at it, I laugh. Because how else do you keep a 9-year-old entertained? Especially trying to teach them to invest in stocks. It had to be fun. It had to be simple. It had to be safe, predictable, consistent, and most importantly, no way for her to lose. So I had 5 simple rules. Rule number 1, never buy anything that's not on the list. Well, for you guys, it's never buy anything that doesn't make sense or you don't want to hold on to. Now, when I say to my daughter, don't buy anything not on the list, well, she had a list of stocks. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. If it's not on one of those 5 lists, it was an absolute no. I don't care how good it looked. I don't care how many talking heads on TV say, ooh, 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 buy this, buy. No. If it's not on the list, it's an automatic no. Terribly sorry, she's 9 years old. She needed rules. Okay? Rule number 2, never sell at a loss. It defeats the purpose. What if the stock drops? Well, that's what they all do. They go up, they go down. What do you expect? Just because you buy it, it's going to not go down? Hell no. Come on. Be serious. Stocks go up, stocks go down. That's all they do. They don't come to your house and take the dog for a walk. They don't wash the dishes. They don't come to the house, make the bed, put the little candies on the pillow. No, they go up, they go down. That's it. That's all. If you expect them to do anything else, this is not a game for you. You shouldn't be playing this game because they go up, they go down. You're going to buy it, it's going to drop. You're going to buy something else, it's going to shoot up. Never buy something you don't want to hold on to long term. Okay, if it doesn't make sense, don't buy it. If you think it's going to go down and you're going to panic, don't buy it. Never buy something that doesn't make sense. That's number 1. Number 2, never sell at a loss. Number 3, this is the one that boggles my mind. Okay? Never buy a company that's not consistently profitable. Now, you can decide how many years of profit's okay with you, but for me, 2 decades, 20 years. Now, you may think that's a lot. No, it ain't. Stock market's been around for 400 years. 20 years is nothing compared to 400 years. Okay? There's a company called Consolidated Edison. 200 years in business, and they're still paying dividends. Rule number 4. Weekly options only. I don't do monthlies. The numbers don't work for me. For me, if they work for you, fine, great, no problem. Not for me. Okay, you ask me to look at a weekly, a monthly option, it's going to be an automatic no. I'll look at it and then tell you no. But for me, monthly options just don't work for me. I like weeklies. Okay. 5. Make sure all the numbers work. Now we're going to get into that in a little bit and explain to you what do I mean by that. Well, I'm going to tell you plainly. What am I buying it for? What strike price am I selling? Am I collecting a premium? If so, how much? Is it 1% or more? If not, no. Simple. Make sure the numbers work. And they either work or they don't. Okay? There's 10,136 companies to choose from. My list is only 300. I'm okay with that. Next. Rudy, I bought that list for $20. Why? You could have got it for free. You only mentioned 4 groups. No, I didn't. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's. That's 5. Hey, Boogeyman, in theory, that's plenty impressive. Uh-oh. That company can do that. That's not a question, that's a statement. I like it if you guys have questions, not statements. Odom, thank you. Apple Hospitality REIT. Charlie, you got to give me the ticker symbol because I have no idea what that is. Right now, Raphael wants you to look at QYLD. Now, Raphael, I appreciate your interaction. I really do. If you could do me a huge favor, Raphael, don't ask me to look at something that you do not understand. If you don't understand it, why are you asking me to do the work for you? I know what QYLD is, so let's take a look at it, and I'll tell you why I don't like it. Because apparently, you seem to like it. Right here. QYLD. All right, now, I'm using Yahoo Finance. You can use whatever finance website you want to. But you are going to need to get a financial website to be able to look at all the numbers that aren't available on the trading platforms. Because the trading platforms don't have everything available. Okay, so let's take a look at this. Okay, Global X NASDAQ 100 covered call ETFs QYLD. Okay, I'm looking at the historical performance because I want to see how consistently profitable this is. All right, so now we're going all the way back to March 13th, 1986 to today. Well, I'm only going to look at 2025 because that's 20 years. So let's go all the way back 20 years. Come on. Uh-oh. Okay, so the first dividend this thing paid out was in 2014. Didn't I say 2 decades? Raphael, 2 decades? This is only 11 years. Okay, that's not 20 years, brother. 20 years is 2 decades. This is only 11 years. So automatically it's going to be a no. But hold on. It actually gets worse. Let's take a look at how profitable they are consistently. You ready? First dividend, 25. Second one, 19. Now, like I said before, I didn't go to college, okay? I purposely tried to fail out high school, but I gained all my credits by the time I was a junior. So my senior year, I basically did nothing all year. Got D's and F's in my senior year. They passed me anyway because my junior year, I had 71 credits because I was studious and I did a bunch of stuff. But my senior year, I only needed 1 credit. I just needed to show up. I failed almost everything in my senior year, but I still passed because I got 72 credits. My junior year, I got 71. If I got 1 more credit in my junior year, I could have quit. I could have dropped out of school a year early. But anyway, besides the point. But here's the thing. I didn't go to college, and I'm not a math professor. But I do know that 25 is higher than 19. So if your first dividend is 25 and your second dividend is 19, well, isn't that going backwards, Raphael? Okay, I want 20 years, 2 decades. Well, you give me one that's 11. And the second dividend is lower than the first one. That's not consistent profitability, brother. That's going down. Okay? So let's keep on going. 19.25, that's backwards. 19.3, well, that's not going forward either. That's 2. 26, 24, backwards again. 21, backwards again. That's 4 times, and we haven't even done 1 year yet. 21, 20, that's 5 times. 22, 19, that's 6 times. 24, 14, that's 7 times. 23, 16, that's 8 times. 15, no, fuck it. No, I'm not even in 2016 yet, and we're already at 7 times going backwards. Raphael, explain to me in a manner which I understand, which I'm not a college graduate, I admit that. But if half the time it goes up and half the time it goes down, how can you possibly say that's a good investment? Seriously. In theory, that's pretty impressive. The company can do that. Thank you there, Boogeyman. I only mentioned 4 groups. Yep, whatever. I bought the list for $20. Okay. Nike call. Cool beans. Mike, way to go. What's up with alt? Neil Diamond. What's happening, brother? Alt. Let's take a look at alt. I'm going to say hell no to QYLD. Okay. QYLD. Hell no. Uh-oh. Oh, come on. All right, what the hell? Flying rat turds. All right, it's not working. All right, let's go to the next one. Let's get back to there. Let's get back to here. Let's get back to here. Okay, next one. Okay, Neil Diamond wants to take a look at alt. A-L-T. What the heck is A-L-T? Altamoon Incorporated. What the hell is that? Okay, 771. It has a weekly. Okay. Okay. A-L-T. Let's see how wonderfully profitable this is. Are we ready? ALT, $7.71. Oh my goodness, look at that. There are no dividends in the time period selected. That's probably why I never heard of this company. Think about it. Why would I invest in a company with offering me more work than I want to do? Okay, I want to look at dividends. Go right to the dividends. Are they increasing? Great. Well, if they have no dividends, what the hell am I looking at it for? Invite Mike. Okay, Mike Mays, you want to join in with the live and be a co-host? Great. Send me your number. Maybe we can do it another day. I don't invite people I don't know or I haven't talked to. Plain and simple. All right. What do we have here? APE, Amon. Yo, can you put your hand on the screen for Lamar? Like that? There you go. What are we looking at? We're looking at dividend stocks for increasing wealth. AMD, no. What are we looking at today? Well, we're looking at the moment, something that's going to be a no. All right, next. What do we have here? Oh, this is helpful. Arianita, good evening. Exactly. Cool beans, cool beans, cool beans. Rafaela, James, can you key on an upcoming earnings release date like you can an upcoming dividend? Absolutely. Let's go here. Ready, Rafael? Here we go. Here we go. Right there. Market watch. I come over to this side right here. Check this out over here, Rafael. Dividends, earnings, conference calls, splits, economic day, futures liquidations, market drive, ETF dividend distribution. Okay, if I wanted to click on earnings, Let's get rid of the dividends. Earnings. Oh, only three companies that have earnings. Smuckers, McKesson. Oh, BF. I don't even know what that one is. Okay, those are the earnings. But I like the dividends. I don't do earnings because I've seen positive earnings where stocks go down. I've seen negative earnings that stocks go up. Boogeyman, does she invest now? You mean my daughter? Okay, apparently you don't have a little girl. When she was 9, she was my shadow. We went everywhere. We did everything together. When she turned 13, I was the ATM devil. Okay? ATM devil. No. You always say no. You never buy me anything. Well, you want to make money? Do it yourself. You were doing fine. Now daddy's ATM. Yeah, no thank you. So, no, she doesn't do it anymore. But she's 26 now, and she's thinking, you know what? I'm going to go back to that investing. Oh. Okay. Now, I don't see why people do that fancy lettering because I can't understand a damn word of that. But I do know CMCSA. So let's look at Comcast. Somebody wants to take a look at Comcast. CMCSA. Now, if you don't know anything about Comcast, it's a cable company. Okay, they were incorporated in 1964. They got over 60 million customers paying them a monthly fee for using their services. 60 million. What is Comcast? It's a bunch of digital X's and O's going through a bunch of wires. Okay, anyway, here we are. The high, the low, where was it? Where is it? Look at the motion. Up, down, sideways, 34.84. Okay, so 34.84, we'll be looking at the 35s. Well, the 35s are going for 15 cents. You do realize 15 cents on a $35 stock is less than 0.5% a week. Now, don't get me wrong. Some of you people might like 0.5% a week. 0.5% a week is over 24% a year. Okay, R.D. Waller. Are you the 10-minute trader or dividend stock talker or both? Okay, listen closely. R.D. Wheeler. If you ever heard any of my videos, they all sound the same. Hey everybody, my name is James. This is Dividend Stock Talk brought to you by the 10-minute trader. Okay, so Dividend Stock Talk is a relatively new branch of what we've been doing, but the 10-minute trader has been around for about 20 years. Okay, my first post as the 10-minute trader was August 2011. My first public post, my very first podcast, not podcast, what do they call those things? Blog. My very first blog was August 2011, okay, where I shared all my trades. So I've been sharing all my trades since 2011. Well, the only reason you're seeing me now is because of technology. Because 2011, they didn't have video, okay? I went to video, I believe, 2014, 2015, 2012, 2013, somewhere in that area. And I had one of those big, huge VHS players. So, yeah, I'm following my daughter around with this big, huge, you guys remember those big, huge video recorders with a big, huge VS, yeah, one of those. Yeah, that's when I first got started with one of those. Okay, so as it progressed over the years, and only in the last 2 years has it been mobile. Okay, have you been able to pick up your phone, press play, or press live, and then you're live. But you can't go live until you have a couple of thousand people. So yeah, I've been doing this for a while. All right, hold that thought. Okay, Jody, how many streams are you running? 9. Do you understand what makes a dividend a qualified dividend? Well, Jim, we all have our own definitions. For me, a qualified dividend or a qualified dividend stock, for me, is any company that's increased their dividends for at least 2 decades. And this is my own qualification. I said a qualified dividend stock company. For me, my qualification is 20 years of increased dividends and weekly options. Okay, I invest in pre-qualified dividend stocks. My exact wording is pre-qualified dividend stocks. Well, who's qualifying it? I am, because it's my trading strategy and it's for me. So you guys are just watching what I'm doing, and I'm answering questions as if I was going to do it. So for me, a pre-qualified dividend stock is any company that's increased their dividends or their profits for at least 2 decades and have weekly options. Okay? That's my qualifications. OMG, Bill Nye. Oh yeah, I know Bill Nye is. Where are you looking at today? All right, we already did that one. Nike have served a graded and desist. Okay, I have no idea what that means, Ramblers. All right, MF, I can't even read that one. You realize qualified dividend is a term that determines if the dividend is taxes or ordinary income. Okay, thank you for the education. It's not what I was saying. What I was saying, pre-qualified dividend stocks. Pre-qualified dividend stocks. For me, pre-qualified dividend stocks is 20 years of increased dividends and weekly options. It's my qualifications. It's my rules. You know, my game, my rules. Okay? Your game, your rules. You can do whatever you want. But here, my game, my rules. I'm only looking at stocks, in my opinion, that have 2 decades of increased profits and weekly options. That's what I considered a pre-qualified dividend stock. Not a qualified dividend. There's a big difference between a qualified dividend and a pre-qualified dividend stock. Okay? Terminology and use of words is it's called syntax. Let me give you an example. You ready? How you use your words. Now, I'm going to give you 2 phrases. And they're going to be 2 totally different things, but they're going to have the exact same words. Exact same words, 2 totally different meanings. Are you ready? Johnny bit the dog. Johnny bit the dog. Johnny bit the dog. 4 words. It means something. You got a picture in your head. Johnny biting a dog. The dog bit Johnny. 4 exact same words. 2 totally different meanings. So when you say qualified dividend, okay, that means something. When I say pre-qualified dividend stock, something totally different. Listen to the words in the order in which they were said to create a picture in which you're seeing. So what you're saying, qualified dividend. Okay, a qualified dividend is what it is. It has meaning. When I say pre-qualified dividend stock, totally different meaning. I hope that makes sense. Words have meanings. If you're teaching people, you should be knowledgeable on the topic. Well, I am. I know the difference between a qualified dividend and a pre-qualified dividend stock. Explain to me where that's wrong. Okay, when you say you got to pay taxes, great. Which ones? Okay, so you're saying qualified dividend. Great, I know what it is. Okay, I'm not doing anything with qualified dividends. I'm doing something with pre-qualified dividend stocks. Different story, different meaning, and words do have meanings. Do you? Yep, oh boy, I got one of these guys. All right, let's keep on going. What do we have here? Not given served. Okay, cease and desist. Okay. Joachim Salom, brother. Joachim Salom. Oh, same to you. Hello, sir. Young, this guy is smart, and he reminds me of Michael Scott. I have no idea who Michael Scott is. What's that crypto? I don't do crypto. Glug, glug, glug. I lost a lot of money in equities this week. John Doe, I have no idea what you did, why you did it, or why are you telling me? You lost money in equities. Okay, what did you do? And what does that have to do with what we're trying to do today? I need 10% because I put in more than I can afford. Then bills come in and out it goes. Smartest investor ever, only put in what you can afford to lose. Okay, Mad Hatter. CRCL, we looked at last night. Hey, dude, are you in a lab? No, I'm in the spare bedroom that we don't use. AMD has 2 days to the upside, but it might be too high. What do I think? All right, well, number one, I don't like AMD, but let's take a look at it. AMD. Whoops. AMD. Hell no. Wasn't that quick? Okay, number one, I don't buy at the high. To me, it doesn't make sense. Okay, stock goes up, stock comes down. Stocks go up, stocks come down. Stocks go up, yep, I'm waiting for it to come down before I'd get into it if I was going to get into it. But I don't do AMD because the numbers don't work for me. Simple. I am legend, triple Q. Again, someone who doesn't listen. Nice call on Kroger last week. Why? Gotta love it. Uh-oh. I got somebody wanting to look at SCHD and QQI. Hey, world you want to live in, girl. How are you doing? Cool beans. Uger, Coca-Cola. Come on, Uger. We look at Coca-Cola every week, and every week it's a no. Now, the reason why Coca-Cola is a no, the price, $69.63, closest strike price is going to be the 70. The 70 is going for 51 cents. That's less than 1%. Okay? I think in the 20 years I've been trading, I may have traded Coca-Cola twice because never do these numbers work for me. Or I should say they haven't worked for me. Okay, how about M? We haven't looked in a minute, or I missed it. Okay, M. Now, I actually have some M. Not the time to jump into M, but look what's happening right here. Okay, high, low, where was it? Where is it? Look at the motion. Down, up, down, up, down. What's going on here? 11.18. The 11 is going to be the closest, 26 cents. Well, that's more than 2%. Okay. That makes sense. Well, let's take a deeper dive into the numbers and see if that makes it. Because remember, it's always by the numbers. 1, 2, 3, 4. Well, number one, pick your stocks. Number two, put it into the calendar. Number three, check out the chart, check out the numbers, and then go by the books. Okay? Here we go. Classes. A year ago, Macy's is at the high of the year, 2041. Well, the bottom of here is right there, TDS day. Okay? There you go, TDS day. Okay, that was 981. So there's the bottom right there. 981, shoots up, pulls back, shoots up, pulls back. Right here, 2 days to the upside. Check it out. Okay, so tomorrow, hypothetically, if tomorrow it is higher than the 1102, that's my cue to jump in. 2 days the upside, third day higher. Right. Rylan, CRWV. Rylan, what the hell is that? Never heard of it. Okay, there's probably a reason I never heard of it. So let's finish up with Macy's first. 30 days. Alrighty, 30 days. Here we go. 30 days ago, we're at 12. We jump up 1260. We drop down to 11. Back up to 1260. Down to 1050. 1 day, 2 days to the upside. 1, 2. See it? So my rule for me, now I don't cherry pick anything, and I try to tell you that. I look for the 30-day bottom. Monday. Tuesday was higher. Today was higher. So if tomorrow it opens up more than 1102, that's my signal to jump in. Okay, so if I jump in at 1102, what's the 11 going for? 26. Well, let's do one. Would you jump in on Thursday or wait until Monday? Okay, it's always going to be a personal preference. Okay, most of my money is already invested Monday and Tuesday. So Wednesday, Thursday, Friday, I usually don't buy anything unless, of course, I get a surprise dividend and this money just shows up. And that does happen because I don't go into looking for the dividend. So when they pay me a dividend and I don't see it coming, well, it's a surprise. So if I had some money, I would do Macy's tomorrow if it increases over 1102. So let's take a look at the numbers. Let's get rid of this. Change this to a covered stock right there. And let's do next week's, not the 18th. I don't want the 18th. 11s, which is right there. One contract right there at the market. I love at the market because it fills first thing in the morning and I can go about my day. And my profit's already there. One thing I love about covered calls is I know what my profit's going to be even before I do it. Most people buy the stock and have to wait to get the profit. No, I get my profit the instant I sell this because I'm doing 2 trades at once. Listen closely. Buy one covered call, Macy's 100, that's the weeklies. 3 July 25, that's next Friday. $11 call option against the Macy stock at the market to open to open. Now, I didn't stutter, okay? I didn't repeat myself. To open means there's two orders. I'm buying the stock, that's one order. I'm selling the option for someone to buy the stock from me for the exact same price I just paid for it. That makes no sense, doesn't it? Makes no sense. If I'm buying at 11.02 and I'm selling at 11, how can I make a profit? The premium. Okay, so the covered call, in order for someone to buy, it's kind of like, I got to go to the bathroom. Can you hold my place in line? Pay me, and I'll hold your place in line. Same thing, okay? The profit, $26 per contract. The investment, $1,074. So let's bring the calculator up. What does that mean? What's the rate of return if I do this tomorrow? Now, remember, I don't give tips. I give only a tiny bit of advice. Not about buying the stock. It's about being safe. Okay, tip number 1, talk to a tax strategist or a tax planner when you're setting up your account to avoid taxes legally. Number 2, never use margin money until you understand the risks involved. Number 3, never put real money in until you perfect all this with paper trading. It's kind of like playing Monopoly. Number 4, never blindly listen to some idiot on YouTube. That's me. I'm the idiot on YouTube that you're listening to. If it makes sense, check it out. Do your research. Do your due diligence. I don't tell people what to buy. I don't tell people what not to buy. I only tell you what I'm going to do. However you interpret that, that's up to you. Let's get back to this one. So if 26 is maximum profit, I know what my profit's going to be even before I do it. Remember? Simple, safe, predictable, consistent, predictable. I know what my profit's going to be before I do it. The consistent part comes in, I can do this every week. Because if it hits my target this week, well, great, I made my profit. I'm out to get all my money back. I made my profit. I'm looking for 1% a week. We're going to get to that in a second. But my goal is 1% a week. That's it. So what is this one offering me? So if I buy it at 11.02, which is the current price, which it was before I did all this, 11.02, and I'm selling it at 11, what's my profit? Well, my profit's $26 per contract. Well, let's do some math. And for that, we need the calculator, okay? Profit, 26 bucks. To find out the rate of return, you take the profit and you divide it by your investment. And that is $1,074 per contract. If you want to get 2 contracts, you want to get 5 contracts, you want to get 20, you want to get 30, you want to get 100. Okay, and that comes to a grand total of 2.4%. Do you have any idea what 2.4% is at the end of the year? If you get 2.4% every single week, now I don't do that. I average 1.4% every average. That means sometimes I make more, sometimes I make less. Eric, Mara, a favorite, pays no dividend and missed earnings 3 times in a year. Yet 3.5%. Why? Eric, hold that thought. Okay, hold that thought. So, 2.4%. Now, you got a couple questions to ask. Question number 1, does it make sense? That's always going to be question number 1. Does it make sense? Well, do I like Macy's? Do I know who they are? Am I okay with buying it? Well, that's a couple questions. Question 1, does it make sense? Question 2, do I like Macy's? Question 3, do I like Macy's at this price? Question 4, am I going to buy it, hold on to it for the rest of my life, sell a covered call every week until it hits my target? What's my target? Well, my target's 11. What's it at now? 11.02. Go figure. Come on, it's not that difficult. It was created for a 9-year-old. And you get these adults trying to make things complicated. Okay? Now, I've been trading for over 20 years. The trading strategy I'm showing you, that I'm giving you, I'm not asking you to buy anything. You will not hear me say, I got this to buy, come buy it. No, you won't hear me say that. 'Cause we're all adults. We know how it works. I've written 14 books. You know how to buy them. Go to you know all that stuff. What I'm doing here is I'm sharing information. I'm giving it to you for free. Do you need anything from me? No, you can do it on your own. Do I have stuff? Yeah, I do. I'm not going to tell you what it is because you're adults. You know how to figure it out. Go to the website. It's all there. Okay, Eric. Mara. Okay, we're going to look at that in a second, Mara. And world you want to live in, girl. I already own Macy's. So the only thing I would do with Macy's is I would dollar cost average if it made sense. To me, that's a big one. Does it make sense? Because I have a couple of goals in mind. Goal number 1, consistency of profitability. Goal number 2, preservation of my capital. That's it. That's it. Consistency of profitability, 1%. And 2, preservation of my capital. I have no desire whatsoever to go back to work. Now I say that, but I am working on other side projects. Okay, so I'm going to create another company and just give it to my kids. Let's see if they want to do it. Tennis Pro, dude, how are you today? You've been showing up quite a bit lately. How you doing today, boss? Red Bull, what's happening? Okay, hold on. Okay, we got a couple. We already looked at Coca-Cola. We did that one. Did CSA. All right, did that one. Raphael, thank you. You're welcome. Bob, what's going on, Bob? Power Right, what's happening? Michael Hunt, how are you today? Michael Hunt, yeah, that's funny. Does it make 50 cents? What's the real question? That's the real question. Michael, SCHD, QQI, what do you like better? Neither one, Michael. Do yourself a favor, Michael, before you buy anything, ever, check the numbers, check the performance. Me, personally, 2 decades of consistent profitability. SCHD, no. QQQI, no. Don't fit for me. It might work for you, but it doesn't work for me. Why? Nice calling Kroger last week. It wasn't me, it was the numbers. You know, the numbers work, the numbers work. I Am Legend, same thing. Take a look at the Qs. How consistently profitable has it been? Have they increased every single year? Okay, the answer is no. I already know that. I've looked plenty of times. You're not the only one to ask about the Qs. For me, it's a no. Roger Sam, how you doing? Alt has little profits. Okay, Alt was a no for me. Point them out, we take them down. All righty, Red Bull. Okay, thank you. CMCSCA, where did you do that one? Oh, Roger wants to take a look at Disney. We'll take a look at that in a minute. Got a couple questions over here. We already looked at AMD, and it was a no for me. My Beanie Baby investment finally paid off. Yep, everybody else sold too early. Yep, whatever. I have been very profitable with just doing buy and sell, dollar cost average trades. Okay, whatever. If it works for you, fine. John Werner, good evening. Some kid from Britain. Okay, yeah, whatever. I'm not going to pay attention to that kind of stuff. Big swing confidence. You sell or buy the calls. Nope, I don't buy calls. I see this dividends has analogs to staking. And no, I don't do crypto. Sorry. You need to buy. No, I don't. Hey, James, I sell weeklies. Bag OKTA. What do you think of that stock? Okay, Mr. Ryan. OKTA, I never heard of it. Usually, if I've never heard of it, it's usually going to be a no. Usually. But I'll give you the benefit of the doubt. Okay, I want to change everything. Get back to the start right there. And you did say OKTA. What the heck is that? OKTA. Okay. It has weeklies. 98.21. It's in a downturn. OKTA. Into Yahoo Finance. Historical performance. Let's see how wonderful they increase their dividends. Imagine that. The reason why I don't know about it, there are no dividends in the selected time period. So basically what that's going to mean is I'm stuck looking at 20 years of what do you call that? 20 years, quarterly earnings reports and yearly reports. Yeah, sorry, I don't want to do that. Okay. And here's another thing. Without dividends, how do you know when that moves predictably? Because the thing I like best about dividends is they're predictable. Stocks move for two reasons and two reasons only. Okay? You can argue all you want, you can bitch, moan, complain, but it all comes down to two. One is what's called a known reason. Well, we know why it's moving. Two is called an unknown reason. We have no idea why it's moving. Okay, let me give you a couple examples in case you don't understand the difference between the two. Well, number one, the unknown reason. Let's say hypothetically they get hit with a lawsuit. Came out of nowhere. You didn't know it was coming. That's an unknown reason. Okay? Apple. Huge lawsuit last year. Stock dropped. 3M. Lawsuit last year. Stock dropped. ExxonMobil. When the Valdez crashed in the Northwest, stock dropped. Nobody knew that was going to happen. British Petroleum sprung a leak in the Gulf. Nobody knew that was going to happen. The stock dropped. Okay, what's his name? The guy at Apple. What's his name? I forget. Well, he died. Steve Jobs. Steve Jobs died. Stock dropped. Nobody knew those events were coming. That's called an unknown reason. Uh-oh. Hurricane, tornado, flood, earthquake. Sometimes they affect the stocks. Nobody knows when they're coming. Okay? Those are unknown reasons. Let's look at the known reasons. What do we know? A merger. We know that. Stock split. We know that. Dividends. We know that. Earnings. We know that. Because it's written down somewhere. And then we get seasonality. What's that? Winter, spring, summer, fall. Well, we know what those are. Well, certain stocks react differently in the summer than they do in the winter. Okay? New Year's, Thanksgiving, Easter, Christmas. These are certain times of the year, and we know exactly when they're happening. And thanks to seasonality charts, we know exactly how the stock's going to react to those times of the year. Those are known reasons. Unknown reason, unknown reason. I don't like unknown reasons because you can't plan for them. That's why I like dividends, because you can plan for them. It's written down. Every 90 days, certain stocks pay a dividend every 90 days. And here's the thing with dividend stocks. They have a tendency to increase in value just before the dividend date. So by knowing that, by knowing when a stock is going to move, what do you do with that information? Most people just buy the stock and then wait for it to move. Well, good for you. I don't want to do that. Okay? Because a covered call, I know what my profit's going to be, whether the stock moves or not. All right, let's keep going. Next. Wow, what do we have here? Oh, Roger wants to take a look at Disney. How I love you, Disney. Okay. Nope. Wasn't that quick? Roger, did you see how quick that was? It takes 3 to 4 seconds to figure out a chart. That's it. 3 to 4. Especially for what I'm doing. I'm jumping in, I'm jumping out, I'm grabbing a little slice of the pie, that's it. Because there's 10,136 different companies. Well, if I get a little tiny slice of the pie every single week, that's 1% every single week. That's over 50% for the year. That works for me. So let's say why. See where it is right now? Let's zoom into that, give you a better clue, better cue. Here it is. Here's the high of the year. Okay, look at all that space down here. Okay, high of the year is there, down, back up again. Yeah, I don't see it making another high. And if it's going to, yeah, I want no part of that. Because there's 10,135 other companies that might look better than that. But it does have 2 days to the upside, 1, 2. But how far does it get to go before it gets into territory where it's never been before? And EKC, so then would Siri would be a good choice, has weeklies. Well, I actually own some Siri. Casey. Siri. S-I-R-I. Oh, interesting. Okay, high, low. Where was it? Where is it? Look at this. Up, down, up, down, up, down. Now she's going, I'm going to say channeling, because someone gives me a hard time when I say sideways, because stocks don't go sideways. It just looks like it's going sideways. All right, so let's zoom in a little bit closer. James, watch your show every night. You're the best. Thank you. Weekly. Loved Kroger. Way to go, Jonathan. I'm glad it worked out for you, brother. Okay, you know what? I get a little tired of the little guy getting shit on all the time. I'm a little guy. I grew up on welfare. We were dirt-ass poor. We were so dirt-ass poor, I didn't realize it until junior high school when all my friends and classmates said, you're poor. We're having ice cream. You can't have any. It is what it is. You know, I had no control where I was born and what I was born into. But at the age of 18, yep, I joined the service and took control of my own life. All right, Eric, we're going to take a look at Mara next. Let's take a look at Siri. Let's go look at the last 30 days because this doesn't look that favorable. I don't know. What do you think? Take a look. 30-day high, 30-day bottom. Look at this. Up, down. Here's the bottom here. She shoots up. There's your 30-day high. Profit taken brings you down to here. Now from 21 to 22.50, that's only $1.50. That's only 5%. And could it be pulling back down today? Doesn't look that great. Sergio, how are you doing? Uh-oh. Hard wallet buster. Oh, hard wallet abuser. Okay. AMD is king. Okay. DTEL. Oh, DTEL. Or T-deal. All right. Yeah, Macy's. Yeah, they haven't increased their dividend in the last 20 years. Yes, I'm aware of that. Okay. They got name recognition and they have a lot going for them other than that. But anyway, yeah, you're right about Macy's. Okay, but every once in a while, think of it this way. Every once in a while, when I have an investor tapping me on their shoulder, hey, James, buy me some Macy's. Well, then I buy them some Macy's. It is what it is. Okay, so I have some Siri. To me, it might not be the best time to jump in because look where it's going. The bottom's down here, way up here. It only had from here to here left to go. Can it do it? I don't know. Not a risk I want to take, but I already have some. When you get a substantial profits in the market, what's your preferred method of realizing those gains? Buying some more stocks or taking a vacation? Okay, so Hardwaller likes AMD. Okay, let's take a look at that one. Okay, AMD. All right. AMD. Okay, so Hardwaller. AMD. Oh, wait a second. There are no dividends in the selected time period with AMD. Why the hell am I looking at it? Think about it. No dividends. That means I've got to read 20 years of annual reports and quarterly reports to figure out whether or not this is profitable. Why the hell would I want to do that? Okay, I have companies that already fit. So why am I trying to squeeze a round peg in a square hole? Sorry, dude, I don't like AMD. And I don't know how many times I got to say I personally don't like it. Because it has no dividends. Because worst case scenario, when it goes down, you get nothing. But with Coca-Cola or Pepsi, IBM, AT&T, are those companies that do have dividends. The stock goes down, at least I'm getting a higher and higher dividend every year. I don't like AMD. The numbers just don't work for me. Have you looked at BMY? Ooh, Bristol Myers Squibb. Hold on, Aaron. I told Eric over here we're going to do Mara. So let's go take a look at Mara for a second. All right, so it's going to be a no for AMD. Sorry. Well, I'm not sorry. I just don't like it. Mara. Now, I also have some Mara, in case you're looking, and nope, Mara doesn't have dividends as far as I know, but look at the numbers. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down. Now it's going up. It's at 1498. Okay, 1498. I'll be looking at the 15s. The 15s are going for 52. $1.52 on a $15 stock. Now 1% is 15, 2% is 30, 3% is 45. So this is over 3% if you like Mara. So let's take a look. All right, the last 30 days right there. What do you think? Here's the last 30 days. 30 days ago, we're at 14. Jump up to 16, drop back down to 14, back up to 16.50, down to 13.50. Now we're here. 2 days to the upside. Here's the bottom right here. Monday. Tuesday was higher. Wednesday was higher. It's a red day, but it was still higher. A higher bottom and a higher top. Okay, even though she started out higher and ended lower, normally you call it a down day. But it's higher than yesterday. Has a higher top and a higher bottom. So, yeah, it's going up 2 days to the upside. So tomorrow, if she opens up higher than this point right here, then I will jump in tomorrow. But I already have it, so it's not something I'm going to jump into again. MFKNAK. No puts? No. Who wanted to look at Bristol Myers? Aaron wants to take a look at Bristol Myers Squibb. BMY. BMY. Interesting. Okay. 30-day bottom. 30-day top. Here's your profit taking. Looking for a new bottom. Turn around, go back up. We'll put BMY down for next week, but it's not for today. All right, let's keep on keeping on. All righty. So we looked at Mara, Eric. Thanks, James. I like Macy's, but am not in the right now. Looking to jump back in. World you want to live in, girl? Don't blame you. Troglodyte. Been sitting here for an hour, now lurking in the shadows. Thanks for making this digestible. All righty then. Look at Camp World Holdings, CWH. Never heard of it. CWH. No. Okay, I looked. 18 July, 15 August, 19 September, 17 October. Nope, don't do monthlies. The numbers don't work for me. Sorry. Andrea. James Hutt 8. Maria's competitor is performing so much better, just for your information. Okay, Andrea, I have no idea what that means, but okay, thank you for that. RT Waller, you have Mara, but it still has no dividend stock. Yep. What made you skip the requirements? Because it's on Warren Buffett's list. Remember? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay, it was on Warren Buffett's list last year, I believe. With crypto, you can win on capital appreciation and an additional revenue from staking rewards that can be programmed to drop every second and every minute. Mateo, good luck with that. I don't do cryptocurrency. There's nothing back it up. The cryptocurrency does not have a physical product. Okay, Ford, at least they make cars. Okay, AT&T, well, they have a service with telephones. Okay, IBM, computers and computer software. Cryptocurrency, nothing but an agreement among strangers. Andrea, Hut, H-U-T. Is that Pizza Hut? Hut and Corporation. 1745. All righty, it looks interesting. High, low, where was it? Where's it? Look at this. Up, down, up, down, up, down. What's going on here? Well, let's zoom in a little bit closer and see. Last 30 days. Okay. Down, up, down. 30-day bottom, 30-day top. Profit taking, turning around, going back up. 1 day, 2 days to the upside. From here to here, I don't know. 1750, 76 cents. Oh, hold on. Something doesn't smell right here. HUT. What do you call it? Yahoo Finance. Oh, that's what it is. There are no dividends. So come on, Andre. You know that I don't do those kind of things. I don't know who the company is. It means I'm going to have to do a little bit of extra work for what? Felix. Hey, James. Did you do any covered calls today? No, I did them all yesterday and the day before. How you doing today, Felix? Thoughts on BNS? When you get a covered call assigned, how long does it take to get the shares pulled away? Same day. Okay. I thought it was a prerequisite the company had to show dividend increases for 2 decades. For me, it is. But when I have a client that says, hey, I want you to buy this, oh, I buy it. But for me personally, yeah. Does that make sense? Okay? Because when a customer or client says, hey, can you buy this? I say, okay, if you want. All right, so let's keep on going. CWH. Hey, Speed, what's happening? What are monthlies? I missed what I looked at. Okay. What the heck is CWH? CWH. Didn't we just look at this one? Yeah, this one was a no. Monthlies. I don't do monthlies. Sorry. Can you please look at him and hers? That's HIMS, right? HMS? HMS. Is that right? No, that ain't it. Nope. I have no idea what hims and hers is. FEAT. 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 What the heck is feet? It's a hell no. Who came up with that one? Lane Griffin. Okay, Gabrielle's. Yeah, got to tell me what the ticker symbol for hims and hers is. I don't know that one. Hey, Speed. What are monthlies? What do you look at? Okay. Hey, Speed. Hold on 1 second. CWH. Okay. Hey, Speed. You ready? Okay. Hey, Speed. 18 July, 15 August, 19 September, 17 October, 21 November. Those are monthlies. Hold that thought. 27 June, that's this Friday. 3 July, that's next Friday. 11 July, that's 2 Fridays away. 18 July, 3 Fridays away. 25 July, 4 Fridays away. 1 August, 6 Fridays away. Those are weeklies. Means I can do one of these trades every single week. Okay? Weekly options, monthly options. 2 totally different animals. I don't do monthlies. The numbers just don't work for me. Got it. Cool beans. Mateo, I don't do cryptocurrency, thank you. Not you again. Mo, what's happening? Hey, James, I see weeklies. Bag holding OKTA. I don't do OKTA. We already looked at that one. What do you think about that stock? OKTA. Didn't we just look? This has no dividends. Yeah, no. Or maybe Cup. What the heck is Cup? Yeah, no. Nick, what's happening? Remember me, Mo? All right. You should learn how to put your charts on the screen. You can't see what you're doing. I love your content. Just trying to help. Nick Gardner. What do you mean I can't see my charts? I can see my chart right there. I see it perfectly fine. I don't see what you're talking about. But you know what? Okay. All right, Nick Garner, how you doing? No, it didn't. It all-time high. Duh. Hey, James, I sell weeklies. Okay, I don't do OKTA, has no dividends. We already said that one. Rambles, rumbles. How things going since your stroke? I didn't have a stroke. Okay, all right. Moo Cow, what's happening? Good evening, James. I bought Hertz, sold the 6s, expiring the 27th. That's this week. Hertz went up 7. How would you sell it? You got a profit? Take it. You don't want to take the profit? Don't take it. Okay, profit's profit if you take it. It's not a profit if you don't take it. John Werner wants to take a look at AbbVie, yeah. Rambles and Brambles. I bought shares in Tesla. Good for you. I don't do Tesla. Do I have a website? Yes, I do. Hey, Speed. Top left corner. Right there. You see it? Little bio. Oh, I got to put a picture in there. There's no picture. I got to put a picture in there. Bucks or Ja? Neither one. Sorry. John Werner wants to take a look at AbbVie. I love AbbVie. ABBV. Here we go. Check it out. High. Ugh. Got 3 lows. Look at that. 1, 2, 3. That's what you call support. When it doesn't drop below those 3 right there, there's your support. What is that? 165. Okay. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up, down. Here we are right here. Looks like she's turning to go to the upside. Well, let's zoom into that. But before we zoom into it, is it going to be a good investment? Well, $187, the 187.50s, 148 to 180. That's not 1%. Sorry. If you like AbbVie, fine. You do it. Not me. There's too many other companies for me to do to look at one that's not giving me 1%. Sorry, John. Kobe, what software are you using to stream on multiple platforms? OBS. I'd be interested to see how your 9-year-old daughter trading journey, since you taught her this strategy, co-host her, please. My daughter is 26. Okay, she washes dogs nowadays. Okay, I try every once in a while, and it's like twisting her arm to get her on. Come on, JC, people want to talk to you. See how you doing? She keeps saying no. Christian, yep, hello. Guy can't RMKST. What the heck does that mean? RMRKST. Makes no sense, Travis. How about C up? I have no idea what that means. Hoodwinked. His soon-to-do roll out your options if they are going to be called away. Do you wait until Friday? Okay, hoodwinked. I look at my options and my stocks every morning at 9:30 a.m. Okay, I got a morning trading group. We jump on at 9:30 when the market opens up. We have a good idea of what's going on. Now, I share 3 of my accounts publicly. So you can look over my shoulder and see everything that I am doing. And everything that I am doing is, come on, this one. I need this right here, right there. Those are last year trades. We don't want to see those. We want to see this year's trades right here. This year's trades. Okay. Account 1, account 2, account 3. Scroll all the way down to the bottom. All the way down to the bottom. Week 10, week 9, week 8, week 7, week 6, week 5, week 4, week 3, week 2, week 1. Here we go. Week number 1. Account 1, account 2, account 3. Every single trade I do is live and available to see. Timestamp, what kind of a trade it was, how many, what the company is, what the expiration date for the options that I sold. Now, I have one and a half years of data available. The reason being is I'm starting a hedge fund. And in order to start a hedge fund, I need 2 years of verifiable third-party verification of all my trades. So not only do I have all my trades available online, they are also recorded. Every single one of these trades has a video just like this that goes along with it that shows what I'm buying and what I'm selling for the last year and a half. Every single one, 2024 and 2025. Reason being is that when you open up a hedge fund, insurance companies that are going to guarantee the rates of return want to see 2 years of verifiable trades. So every single trade I do is available for you to look at. And yes, I average over 1% every week for the last year and a half. Well, I've been doing it for the past 15 years, but live online with verifiable trades that are time-stamped and have videos to back them up. They're all there. Okay, argue if you want, whatever you want to do. Believe me, don't believe me. I honestly really don't care. I'm what you call a Gen Xer. Okay, it is what it is. You see the numbers, you can believe them or not. You add them up. 50 contracts at $12. What's 50 contracts at 12 cents per share? Well, that's 5,000 shares at 12 cents per share. What is that, $600? Something like that? Whatever, they're all there. From week 1, quarter 1, December 30th to January 3rd. Account 1, account 2, account 3. 4.2%, 1.8, 6.1. 1.8, 1.7, 2.3. 1.8, 3.6, 4.8. You don't believe me? Do the math yourself. Pick them up. 11 at 9 is $99. 7 at 23, that's 215, something like that. 50 at 15, I have no idea. But they're all there. Okay, do the math yourself. Let's get out of there. So, yeah. So at the end of this year, I will have 2 full years of fully documented trades along with the videos of me actually doing the trades. So you can argue all you want, but video of me actually doing the trades and all the timestamps of each and every individual trade backed up by a third-party, non-biased person to do the actual math on what the profits, what the losses were. End of the year, I'll have 2 full years of it. Then I get to start my hedge fund. And I would actively be looking for 13 board members. Okay, we got about 6 that have already committed to do it. So I'm looking for another 7. So I figured 2 years to find 7 more board members, it shouldn't be that difficult of a thing. Especially when I have 2 years of verifiable proof. Not, oh, wait a second. You're going to love this one. Let's go here. Come on.
James.
Yeah.
So earlier, just a minute ago, you mentioned 50 contracts. How are you minimizing that cost for that transaction? Because otherwise, it'll be $50+ dollars.
I'm aware.
So I mean, is there some break? Like, I've heard that I don't know which platforms, like they'll charge you for the first 10, but not after that, or a certain number.
Well, it depends on which platform you're using. I'm using Thinkorswim. And on Thinkorswim, every single trade you do, when you hit confirm and send, it tells you exactly what your profit is. And then it tells you what it's going to cost you. The cost of the trade, including commissions and fees. What is my profit after the commissions and fees? Is it more than 1%? If yes, do it. If no, don't do it.
All right. Thank you very much.
You're welcome. Okay, so as I was saying, I've been sharing every single one of my trades. August 31st, 2011 is when I first started my blog, sharing all my trades. Week 26 totals July 6, 2013. There was a huge drop the last few weeks. We took a break from trading and waited till the dust settled. We didn't take any losses at all this year. We're looking for no loss approach. We dropped down to 20% return as of July 6th. And our weekly average has dropped below 1%. Our monthly average is now 3.3%. Oh, boo-hoo, 3.3%. That was back in 2013. But my very first blog post, 2011, and I have all of these saved up. over the last, how many years is that? I have no idea how many years that is. 2011, 14 years that I've been sharing what I've been doing. Now, I've been trading since the 90s, but I didn't start sharing what I've been doing until 2011. But here's 2013. Oh, look at this. The 1-year chart, the 90-day chart, the 30-day chart. Moving sideways all year, last 90 days, looking like the channel closing the year's high. Last 30 started, still the channel looking at the dividend pushed up forwards, whatever. I don't remember that. 2013, what is that, 11 years ago? 12 years ago? So I've been here doing this for a long time. It is what it is. Okay, so like I said, end of the year, I'll have 2 full years of documented and verified by a third party, non-biased third party to show exactly what my rates of returns are. That's going to be great when I do my hedge fund. 84.24, cockarong, what's happening? All right, let's get back to where we were. You guys don't want to see that crap. Don't want to see that stuff. Let's go back to where we were. Ooh, cockarong wants to take a look at Verizon. VZ, here we go. Verizon, high, low, was, is. Look at the motion, down, up, down, up, down, up. Okay, what's going on right here? Let's zoom into that, see if it's worthy. Uh-oh, we got 20 minutes. We're out of here at 11. Changing my hours. All right, no. It looked really good. Look at this, 30-day high, 30-day bottom. 1, 2, 3 days to the upside. Okay? 2 days the upside, third day, yep, I would have jumped in, and now I would have been, oh, boo-hoo. Because like I say, now I don't change my mind just because it doesn't look right. Well, 30-day high, 30-day bottom, 1, 2 days to the upside, third day would have been yesterday, which means I would have jumped in yesterday, and today would have been down a little bit. It's okay. I wouldn't have sold. I would have bought it and held on to it. What do we got next? The point was, isn't Mara competitor and they're doing much better? Oh, thank you, Andrea. Hey, Matthew, WDS, Woodside, just announced browse expansion from 2030 to 2070. What the heck's WDS? WDS. It's a hell knows what it is, Matthew. I don't do monthlies. The numbers just don't work for me. Randall Ray, what's happening, brother? Target, TGT. Now, I like Target, really do. However, Target is one of those few companies that I keep my eye on specifically when earnings comes out. You see this big, huge gap right there? One there, and there's one there. There's another small one there. That happens every 90 days. Because when the market maker gets a hold of the quarterly report, yeah, sometimes the market maker over-exaggerates. Let me explain to you why. See if some of you, because I haven't done this example in a while. Okay, if someone's going to record something, here's the time to record it, all right? So let's take a look at Target. We're going to take a look at something you guys need to see because it's freaking awesome. Now, let's do it this way so you understand what we're looking at. Okay, less information, right? Okay, so pay attention right here. See where it says bid and ask? The difference between the bid and the ask is called the spread. The spread is what the market maker earns. Now, look at this. 4.3 million shares traded today. So the market maker made the difference between 96.50 and 96.92. That's a big spread. Think about it. 96.50, 96.92. That's a 42 cent difference. That's the spread. Who gets that? The market maker. How much did he get? Well, today, let's do this. Okay, clear that. Whoops. Don't need that. All right, right over to here. Okay, so the difference between the 96.50 and the 96.92 is 42 cents. Okay, doesn't sound like a lot. 42 cents. How many shares traded today? 4.372 million. 4,300,000, multiply 4,372,035 shares. That's how many shares traded today. So let's do the math. Okay. The market maker today made $1.8 million. Well, oh, damn, that was a good one. Whew. Ooh, makes my whole body tingle and gives me goosebumps. Okay, what I wanted to show you is called a black swan. You ready for this? All right. 1, 2. All right, this one's not that big. Okay. Let's take a look at this one right here. You ready? Here we go. Now, pay attention closely. Down here, these little blue lines right there, that represents the average volume, how many shares traded that day. So the average volume for Target, if we go right there, 9.9 million. See it? The average volume, 9.9 million. So if the market maker's making 42 cents a share on 9.9 million shares, let's do a little bit of creative math. Clear. 42 cents multiplied by 9.9 million shares. Okay, so on average, the market maker makes 4.1 million per day. That's nuts. Check out what happens on a black swan. Okay, black swan event, where the stock is up here and it drops down there. Now, why was the drop? Do you see right back here? Dividend and earnings, right there. You can barely see it. Right underneath that little thingy right there. Okay, so let's zoom into that and see how many shares traded that day. You ready for this? 64.5 million shares. So let's do that again. So on average, the market maker makes 4.1 million. On average. Well, this day here, the black swan, 90-something million. Oh, 64 million. Okay, sorry. So we're going to take the 42 cents and we're going to multiply it by 64 million. Okay. So the market maker goes from 4 million a day to 26 million for one day. Now, don't think you're going to automatically go jump and be a market maker. There's a lot to it. You actually got to serve on the floor for a few years, and then you got to pay a huge application fee. Now, I looked about 20, 30 years ago. It was like $350,000 just for the application fee to be a market maker. And then you need all years of experience to be able to do that. So, not that easy. But take a look. Right here on this day right here, 11/19. Okay? The market closed at 156. That's it. Date, open, high, low, close. Okay, so on the 19th, it closed at 156. The very next day, after the earnings report, after the dividend is paid, look what happened. Okay, 122. It dropped from there to there. Why? Because the market maker got one piece of paper saying, ooh, we missed our earnings. So we missed our earnings. 4 words. Worth $26 million to the market maker. That's it. 4 words. We missed our earnings. So the market maker takes that information, because here's the thing a lot of people don't realize. There's 5 numbers every single day. Okay? The opening of the day, the high of the day, the low of the day, and the close of the day. Open, high, low, close, and then there's the range, which is the R right there. Okay? Okay? Open, high, low, close, range. 5 numbers. There's only one number that is created by one person. That's the opening of the day. The market maker. The market maker decides on his own or her own, equal opportunity. Let's blame the women as much as we blame the men. The market maker. I don't care. Women, man, I really don't care. The market maker takes the information. We missed our earnings. 4 words. So he drops it from here to here. Did he do it because the company, the president of the company or the CEO calls up hey, we missed our earnings. Don't come to work today. No. This has nothing to do with the company whatsoever. The way I look at it, we missed our earnings. Those 4 words gives the market maker permission to make a whole shitload of money. Because what is not shown here, okay, these 64 million shares that sold, are those buyers panicking because they missed their opportunity? Or are those buyers saying, we're buying because the market maker dropped it and we're going to take advantage of it? Doesn't really matter. On average, how much was the average again? 9.9? Right. The average, 9 million shares. Average every single day. Just those 4 words, we missed our earnings. Now the market maker decides to drop it. And when he decides to drop it that much, you get a whole shitload of people panicking and selling, and then you get a whole shitload of people buying. What happens? The volume increases so much, the market maker walks away with this huge chunk of change. The rest of these numbers, that's you and me. Market maker chooses where we start. We decide what's the high, what's too high, and we decide what's too low. Okay? So we don't have a whole heck of a lot to do with the opening of the day. That's the market maker. We have control of, we influence how high it goes in the day and how low it goes in the day. The market maker says he draws a line in the sand, he shoots the gun. You know, the starting pistol, go. And then we go. We buy, we sell. But this here, that's called a black swan. And Target, notorious for black swans. Okay? So think about it. If you're a market maker, okay, you get a couple of million every day on average, but you get those 4 little words on that little piece of paper, we missed our earnings. Great. Now you drop the price and you create all this artificial volume or artificial news to create all this added volume. So you can walk away with a whole shitload of money. Think of it, 26 million for one day. That's crazy. But that's what the market maker makes. He makes the spread between the bid and the ask. Whatever the spread is between the bid and the ask, that goes to the market maker. It's HIMS. All right, let's take a look at it. HIMS. Let's go to trade. Let's go to here. HIMS. Interesting. It's going to be a no for 2 reasons. Okay? Bottom way down here, shoots up, pulls back, shoots up, pulls back, shoots up. Big, huge drop right here. Okay, we're looking for a new bottom. Today, not the low of the 30-day period. The 30-day period low is right there at 37.50. That's the low right here. We're at 41.41. Okay, this is going to drop off eventually, and this is going to be the new bottom right here. I like 2 days to the upside. And then on the third, you're going to hear me say it all the time because my rules don't ever change. Because you can go back and look at 15 years ago, the videos I did back then. I'm saying the exact same thing. My rules don't change. I like the 30-day bottom, 2 days the upside, and on the 3rd day, I will jump in. Okay, but HIMS, you got to wait to find the bottom. It's not there yet. Jeff Daniels. I like Jeff Daniels. HIMS is swing crazy, making lots of money, but no dividends. It's one of the best online prescriptions. Thank you, Andrea. Okay, Frito, we already looked at ALB earlier. Scotty Cook, what's happening? Tacoma, what's going on? All right. Okay, we just looked at Luke. We just looked at hymns. Any thoughts on Venture Global? Lewis, I never heard of it. Sorry. Granny, thank you for that. Are you focusing on at the money calls? Is that your approach? Hey, Speed, what I'm looking for is a simple, safe, predictable, consistent 1%. Is the stock in the right place to do that for me? Now, in the money is my preference because the stock doesn't have to do absolutely anything. At the money is usually the highest rate of return. Out of the money, well, the stock has to go up, but do the numbers work and does it look that way? Okay, it's really not that difficult. It either makes sense or it doesn't. Here, if you like hymns, I would look for a bottom because today is lower than yesterday, and yesterday is lower than Friday or Monday. She dropped Monday. Tuesday was lower. Today's even lower. So I do not jump in until it has 2 days to the upside. And then the third day, if it is higher, then I will jump in, if it opens higher. John Macy, I emailed you through your website 2 days ago. Email from my website 2 days ago? Okay, it's easier for you to do it on my TikTok because I'm on TikTok 2 or 3 times a day. My email, depending on which, oh, you're on YouTube. So my YouTube email, yeah. I think I check that once a week. It's challenging to get to everybody. But if you did, I will get to it. John, would you say investing in cartel routes is, no. What is Micron going to do tomorrow after earnings? It dropped hard at market open. No. Why are you looking at? Look at this. Here's TDS. Okay, TDS. From there, okay, it's from $60 to 127. That's a 100% increase. You honestly think it's going to go higher? Me personally, I don't buy at the high. Sorry, because it doesn't make sense to me. This is where I want to be selling. Okay, stocks go up, pulls back. That's where I'd be looking right there. Okay, it went up and pulled back again. Maybe there, but I doubt it. Personally, I doubt it. I'm very strict with the way I do things. I don't have the luxury of being wrong. Okay, we have 4 minutes and I'm done. Let's just take a look at the rest of these questions and see what we got. Randall Ray, HIMS doesn't pay dividends. All right, thank you, Randall. Saul Goodman voice, cool beans. James is legit. Thank you, MSN Garage. Can you review Nike? Lord Detroit, we already did that one. James, sign me up as an executive board. Yeah, dude, I have no idea who you are. Okay, I don't know why the hell. No, I'm sure your parents had the reason call you 537-079-488-913. I just call you Peter, but I have no idea who you are, and nobody is going to be on the executive board that I have not at least talked to and have not at least been in my trading group and had a communication with them on a consistent basis. I have people that have been with me for over 2 years, and yeah, they're higher up on the list than you would be. Because number one, I have no idea who you are. I have no idea what your stance is. I have no idea what your goals are. Because I have a simple goal. I'm tired of the little guy getting screwed. Okay? So we are going to be guaranteeing a 20% return. Okay? It's not going to be easy to do, but that's my goal. I would forego any salary whatsoever to make sure the people that are investing in my company are making their 20%. Let's get to the point. Pizza with a fork. Alrighty then. Does that stock matter? Okay, user, I have no idea. You need to touch the screen smart board. Yes, I do. I want to get me one of those, but not yet. At first, I need to learn how to use the software. That'd probably be a better idea. Can anyone in the chat share what the verdict was on ALB? ALB. Oh, check that out. Here's your bottom here. Tuesday was higher. Today, it depends on what you're measuring. If you're measuring the bottom, today is a higher bottom. But it also has a lower high. But it is bouncing up, going to the upside. if you like Abelmo. And that's always the question. Do I like Abelmo? Okay. We got 2 minutes left. Let's see how many of these questions I can get to. Simon the boss man, check with me tomorrow on BNS. Does high price matter? Hell yeah. I never buy anything at the high. It just doesn't make any sense. The Gorias, what are you looking for in a potential board member? Send me a DM me with your phone number, we'll chat. Okay, if anybody interested. Do you want to have a conversation? Great. Send me your number, I'll give you a call and we can chat. Okay, but I'm pretty strict with my requirements. Number one, I would like you to be part of my morning trading group so we can have a conversation and we can see what kind of a trader you are. What do I think about JBL stock? We got to check on that one tomorrow. Can you explain how to figure your percentages on the trade if it's a trade you want real quick? Okay, DH, are you ready? Okay, DH, I'm looking for 1%, right? The stock is at $60.38. What's 1% of $60? 60 cents. Think about it. $60, 1% is 60 cents. You just take the decimal point and you move it over one spot. That's it. Okay? 1% of $60 is 60 cents. 2% of $60 is 60 cents times 2, or $1.20. Okay? Is Apple too high to... No. Apple is on my list. Well, it's not on my list, but it's on Warren Buffett's list. So yeah, I do Apple. Have you looked at Target? Yes, we looked at Target. Hey there, a little late today. Have you looked at Kohl's? Not today. Going to have to be tomorrow. It's 11 o'clock. Can you look at Carvana? It's not been around for 20 years. It's a no. Micron, we just looked at 2 seconds ago. Curtis, what are your thoughts on ADMA? Never heard of it. Have they growth, blah, 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 20% yield, blah, 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 blah. Okay, interesting. Check with me tomorrow. Carvana, got to be at least 20 years old, brother. What would I do at $2,000? Education. That's it, education. Just here to support. Thank you. DH. How about contact price versus price of stock? You're going to have to explain that one to me. Because the way I look at it, okay, the stock price, $60.38. Okay? The premium on the 60/50, doesn't have 60/50, the 61, 146. Okay? So if 60 cents on a $60 stock is 1%, $1.48 is more than 2%. Okay? All right. So, FTW, no idea what that means. Greetings, people. Good evening. ZT. Bruno, I haven't heard of any of those. Okay, Robert, we already looked at HIMS. It's a no. Nike, we already did Nike earlier today. Target, we already looked at Target. Bruno, we'll have to look at MasterCard tomorrow. Thanks, you're welcome. BTI, what the hell is BTI? BTI? It's a hell no is what that is. Uh-oh, Tiny Coco. Honey, Tiny Coco, really? Tiny Coco, go to... What'd you say, Tiny Coco? SPY. All right, Tiny Coco, you ready for this? We're going to look at SPY. You ready? S&P 500, here it is. Okay? Go back to 2005. Right here. All right, Tiny Coco, you ready for this? 2005, 46, 48, 52, 67. Awesome so far. 51. Boo. 55, 57, 79, 55. Boo, that's twice. 65, 71, 77, 64. That's 3 times. 66, 69, 71, 56. That's 4 times. 51, 5 times. 50, 6 times. Hell no, I don't like S&P 500. The numbers do not consistently increase. No, no, no. It's past 11 o'clock. You guys have a great night, and we'll see you all again tomorrow. Have a great night, you guys over here. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case.